You're welcome. Daniel, I'd like to ask your opinion. What could you tell people? What's a good way to prepare for the future this year into next? I know last time we spoke, one of our clips got very popular on YouTube, remaining liquid. And
Yeah.
I think that is an important point. Anything else you'd add to that? If you could just elaborate on that, please.
Remain liquid, because the opportunities to invest are going to be there, but it would be extremely imprudent to believe that the current valuations are the bottom. Okay, so I think that is so. In order to look for opportunities, you need to have money to invest in those opportunities. No, the worst thing that can happen is to catch you completely invested. The other thing that I would say is try not to bet against your own analysis of the economy. It's very, very surprising to see. Okay, you don't have to listen or to believe or to follow what I say or what you say or what other economists say. But one thing that always leads retail investors and professional investors to make domino effect mistakes is to take positions on something that is the opposite of the way that they actually see the economy. So if you see the economy as we're discussing, weak growth, weak level of productivity growth, challenging system in the financial sector, very elevated levels of debt, risk of stagflation, and all of this, certainly don't go then and purchase assets in the most cyclical, the most exposed to margin expansion sectors, etc. I think that is that I have this situation all the time with people that meet me on the street and recognize me, that say, what you say about the economy is right, but you are too optimistic. It's much worse than what you say. What you say is it's going to be a lot worse. And then after telling me that it's all going to be a disaster, they tell me, is it the time to buy banks? Well, obviously, if you believe that and you buy banks and there's a correction, you are never going to react in a way that allows you to generate wealth in the future. No? So I always say invest the closest to what your personal view about the economy is, because then you at least when you are right and when you're wrong.